April ends down less than 1% as markets almost fully recover from the tariff correction. It was a very turbulent month, opening down almost 11% on massive quote unquote reciprocal tariffs. However, the White House began backtracking with delays and hinting for deals, resulting in a 12% rally through the rest of the month. The S&P ends April down just 0.8% despite massive volatility from the tariff drama. Now we're entering May with a lot of questions on the economic reality. While the market recovered on investors betting on a quick resolution with tariff deals, it feels almost priced for perfection now. However, there hasn't been much positive leaked on negotiations so far. Our largest trade partners seem frustrated while China isn't even engaging yet. A global 10% tariff is already in effect, and the so-called reciprocal tariffs, while delayed, are still a threatening overhang. On the macro front, consumer sentiment and confidence metrics fell 8% in April despite a little rebound from lows mid-month. Meanwhile, new private employment data is already showing a bigger slowdown than expected in hiring. Finally, the Q1 GDP initial estimate was surprisingly already negative, and this was before the massive tariffs were announced. This will likely boost recession forecast odds. While markets are betting on a quick recovery, the data currently isn't pointing that way. Looking forward into May, we see the tariff deal timer steadily ticking down. Rampant reports of empty ships and trucks lends credibility to chatter that we may start seeing empty shelves in the next few weeks. The White House keeps promoting progress with tariff deals, but the most impactful negotiation with China appears to not even have been started. Again, a China deal is what the markets are betting on. Investors are expecting someone to cave. However, the longer it drags out, we could see markets reverse as investors jump ship. With markets in April almost fully recovered, we see a lot of that risk has now just shifted to May. Given its backwards looking nature, economic data will be important in May as it's the first glimpse into how the economy is reacting to the tariffs. Friday's jobs report will likely be an important one to gauge how employers are reacting. We'll also be focused on the mid-month consumer sentiment data for a peek into the consumer's mindset. Buckle up for another volatile month. We'll have more updates as they happen.